Hi, good evening, everyone. We're back again with FinTech Istanbul's online meetups. Today, I have two distinguished guests, one from Sydney, Larry, the CEO of Zip, and one from Istanbul, İlker, the CEO of Birleşik Ödeme. Welcome, guys.
Merhaba.
Wow. Larry, we've never gone so far.
Thanks for having me.
You're welcome. We have never gone so far to Sydney. How are you?
Yeah, really well. It's good to be here. And even though we're on the other side of the world, technology makes us feel like we are in the same room. So thanks for having me.
Yes, thank you for coming. And İlker, how is everything?
It's going good. Thank you, Selim. It's a rainy day here in Istanbul, Larry, but hopefully it's better in Sydney.
Sadly, it's not. Today is also a rainy day. So I think across the world, it must be a little bit gloomy.
Yeah, I see. Okay, we have a couple of questions and we have a good audience right now. So I would like to start with Larry, if you don't mind. Larry, I think most of our guests know about Zip, but for the ones who are not familiar to your company, could you please tell us a little bit about Zip?
Yeah, sure. So, Zip is a global consumer finance or buy now, pay later company. And really, we're all about the freedom to own it, giving customers the freedom to own the experience, the moment, their well-being. Also giving merchants the freedom to get another customer, drive a transaction, get kind of repeat behavior. And also the freedom to own it. We issue microcredit in real time, and we own the responsibilities that kind of come from that as well. And our mission is to be the first payment choice everywhere and every day. We started in Australia about 7 years ago, and we're now in Australia, UK, America, and South Africa. And really, it's all about offering fair and valuable payments at checkout, which is interest-free installments. That's where the conversation starts. But ultimately, it's about building a financial wallet that customers can use, whether it's consumers, small business, and do it responsibly. So we have about 5 million customers globally, and we process about just under $5 billion in transaction volume. We have a team of about 500, and even though we're 7 years in, it feels like we are only getting started.
Right, perfect. The freedom to own it. I like it.
Yeah.
I will come to BNPL, buy now, pay later. So we're going to talk about it. But as far as I know, you had an acquisition of QuadPay in the US. As far as I know, or I understand, you can have an expansion strategy. Could you please tell us a little bit about your favorite markets?
Yeah, absolutely. And I think the point is, to kind of maybe just go back a little step. When we started the business, we looked at the credit card and we saw the credit card is fundamentally broken, right? Because ultimately, very clunky sign up. It sits in your pocket. It encourages bad payment behavior where you pay back in years, not months and weeks, and encourages customers to have very high balances. And what we've seen, interestingly, is when you talk about the credit card disruptor, in Australia, just in the last year, credit cards have collapsed 20%. So it started as a trickle, has become a big torrent. Now, this phenomenon that we saw here in Australia, we saw as a global phenomenon. And different in different markets, whether it's developing or developed, but we saw a huge opportunity. And so for us, the question for us was, we have to go global, and we have to go global now. We had a platform in New Zealand which had proven portability to take buy now, pay later, not just into New Zealand, the United Kingdom, USA, and South Africa. And in fact, the USA business, which is QuadPay, was on the same technology stack. So we're actually in deep discussions and ready to sign the deal prior to COVID. And that was in February. We had the COVID impact, which impacted credit markets, equity markets. So we actually had to put the transaction on hold. As we started to see the impact of COVID come through, we were encouraged by not just consumption, the flight to online, and key items. So we actually saw consumption continue quite robust. And second was the credit quality. In fact, we saw a significant improvement in the credit quality. And so as a result of that, we had an opportunity to run very hard and acquire the business. And the model that we've gone for really is a coalition of founders. Is really, we're trying to build a global payments company. It's very difficult for one person to run it all, but if we find strong founders with strong local knowledge, using the technology, the data science, the credit and regulatory understanding, we feel we can do that in many markets. So two great guys over there. They have, innovators, the first to issue virtual cards in the buy now, pay later space, which has been a great innovation there with the Stripe. A good sense of responsibility. They've invested in credit and Equifax data since the beginning, and is probably the fastest growing, buy now, pay later platform. That's on the stack. We'll look to rebrand early next year, but it's going very well, and we're seeing a lot of growth over there at the moment.
Perfect. Great to hear that. İlker, most of us are familiar with Birleşik Ödeme. You have a FinTech as a service business model. And you are realizing some projects that will pioneer the financial transformation of the corporations. Can you tell how you adopted this vision?
Sure. So as you have mentioned, our core strategy is to serve companies, big multinationals, fintechs and banks, even fintech as a service methodology. So we provide our platforms and services to all these consumers and institutions. As you know, in last 50 years, 50% of the Fortune 500 have disappeared. And next 10 years, another 50 is going to disappear. So the ones who can't cope with the new business plans and change, unfortunately, they are gone. So what we are trying to achieve in Turkish market is the digital financialization. So we are trying to help the enterprises to create new revenue streams and understand their customer needs and provide them 360-degree customer ownership here. So as Larry have mentioned also, we are offering wallet as a service, prepaid cards, virtual cards. So especially after COVID, it's getting bigger and faster every day.
Yeah. Okay. You mentioned about 360-degree customer ownership. How do you exactly maintain this with your existing products?
Sure. Let me give you an example from the wallet as a service. So because the demand for the wallet as a service is going very high after especially COVID pandemic. So the enterprises here and the super apps wants to offer customized wallets to their consumers in order to have the ownership here. So with having their customers inside of the wallet, now they're able to offer new revenue streams, incentive, better CRM management, and customer loyalty as well. So digital wallets create customer stickiness for them. And we are working on new additional financing options for these wallets as well. Just storing credit cards is a basic solution which is being done for years and years. Now we are integrating the credits, loans, and hopefully maybe BNPLs for the future. We will see. So in this way, it's increasing the customer activation and retention as well. So the companies, instead of spending huge amount of money at the advertisement times, now they are digitizing their marketing activities as well. So this is happening in Turkey and Europe as well. I don't know how is the situation in Sydney, but we are seeing it. The demand it's highly increasing. So it's good for the consumer, it's good for the institution, and also for the fintech company.
Okay. Larry, we're not familiar with BNPL, the word BNPL. Could you please tell us what it exactly is?
Yeah, sure. So, BNPL, which is buy now, pay later, it really started life out at the checkout of the retailer. So I think, you kind of talk to advertising, Ilker. If you want to build a wallet, to do that independently, direct to consumer, you need to spend hundreds of millions of dollars to build, you know, a significant wallet. I mean, the amazing thing about buy now, pay later is it's a win-win-win, merchant, customer, and for the issuer or the wallet provider. So really at the heart where all these players started, like Zip, is, you know, our first retailer was a bicycle shop, Chappelli Bicycles, selling a bicycle for $500. And Naomi is coming through the checkout. She wants to buy the bicycle. And rather than putting on the credit card, getting 20% interest, she wants to spread that out over 2 months, 3 months, or 6 months. But the important thing is doing it interest-free, right? That's the hook. There's no additional cost to Naomi. So building an engine that can originate a customer in a retailer online at checkout, you know, looking at identity, credit, and all of that is a key piece. So you onboard the customer. For the retailer, they love it because they're getting an extra sale, or they're getting a higher average basket size, or the customer is coming back because the payments experience, like we have Amazon in Australia, for example, it's a one-click checkout. So it's a very easy experience. So it's a win for the customer who's being able to pay back over time interest-free. It's a win for the merchant who's getting increased sales, and it's risk-free because the providers bear all the risk and settle cash the same day. And the customer is getting a great financial product as well. And I think that's where these products started. And so if you look, we live at checkout, and for businesses like Zip, it took a lot of time to nail this, but over time it means that you have a lot more brand value with the customer. The credit card sits in the pocket, you tap it, there's no connection. We live where the customer is. They're shopping online, they're shopping in store, and they build a good brand. So what we've seen in retail is almost two phenomenons. One is, and COVID has accelerated this, you've got fulfillment choice. Customers meet the need of the customer, give them products where they are, when they are. But similarly on the payment choice side, which is if credit cards are declining, retailers have to offer products that meet the needs of customers, and they have to drive conversion. So that's why we've seen a huge uptick, and now it's obviously becoming a global phenomenon. And it's very early days, even though it's very noisy, right? You read about it in the papers. If you look at the share of payment volume going through buy now, pay later, in Australia, it's probably about 20% of online e-commerce. If you look in the physical store, it's probably still only 3% or even less of retail. So it's got a long way to go, but you can just see the adoption rates and the results it's delivering. And because of that, retailers are happy to take a higher merchant fee, right? Because it sort of sits in between credit, payments, and marketing. So does that give you a good sense, or you want me to drill into anything else?
Yes, perfect. İlker, as far as I understand, it's a kind of installment. We have installments in credit cards in Turkey, 6, 9, or 12 installments, maybe. So what do you think about BNPL in Turkey?
BNPL in Turkey. So, as you know, Turkey is a banking country. So the installment systems and banks' financial options are very advanced when you compare with the rest of the world. But BNPL is a little bit different than installments, especially where we see the value add of this is especially in some areas, as you know, installment limits are lowered. So, and this is caused by some customers avoid this product. So BNPL is a great alternative to provide this. This is what I see. And as you know, Zip's model is a little bit different than the installments here. If you pay, it's like a subscription-based installment. So yeah, it's changing the behavior and the mindset of the customers as well. It's not just installment. So as I know, if you pay your installment in 30 days, it's debt-free. So there is no this kind of option in Turkey as well. But in Turkey, we are hearing also the BNPL is becoming popular here. We don't have any big player like Zip in Turkey, but there are a few startups who is looking into this area especially. This BNPL will be enabled by consumer credits. So it's also needed here in Turkey, but I think it can be a good option to shopping loans in Turkey as well.
I think, Larry, it's interest-free, or by the way.
Yeah, exactly. I think that's where Australia started out interest-free. When we looked at America and you looked at brands like Affirm, for example, which is over there, they all started out with interest-bearing installments. And when we looked at that market, we said that it's not going to last. Similarly, in the UK, you know, a lot of the big retailers have got consumer finance books that are have interest rates of about 30% and actually deliver a lot of profit back to the retailer. For us, we look at that as just a ticking time bomb, because we've seen customers are much smarter and they're looking for a better product. So the shift to interest-free is a big one. And the banks, interestingly, in Australia are looking at the space, working out, do they buy, do they build, do they partner? Because their credit card books have collapsed about 20% year over year. So for kind of the revenue streams, they're working out how best they can innovate to meet the need of the customer.
So as far as I understand, with this business model, you're staying in between the customer and small businesses, which can create some marketing opportunities for you.
Yeah, I mean, I think we sit, our customers are both consumers who are getting wallets and building our base, and business, both big business and also small business. But what's important is, because we've built the retailer interface, their customers are our customers. So even how we treat customers are very different to a traditional finance organization, because it's important you treat the customers well. Those that are approved, those that might be behind on their payments, for example. So you really have to own it end to end. But they see us as to your point, a digital marketing channel. So what happens now? 2 million. If a retailer comes on board, we can promote that in the app. They might offer cash back. They might offer solutions, and so we can become a source of new customer acquisition for them, particularly the millennial customer as well, which is obviously very attractive to certain retailers. So there's a way to bring a new customer segment to a lot of retailers also.
So you're connecting customers with retailers, businesses through a digital wallet, I can say.
Yeah, exactly. There's really, one is we are a payment method at checkout next to Visa and MasterCard. Okay. You're on the product detail page when you look at the shoes or the chair. Next to the price, there's the installment amount. That's very important. A payment option at checkout, and then the wallet. When we advertise our retail partners, and so really it's how we get that content into the digital wallet, either via CRM or via the native app.
So it gives you the opportunity to act not only as a payment company but a marketing company.
Correct, which is why you're able to charge a slightly higher merchant fee. And I think this is the big point, right? If you are a retailer and you look at this as purely payments, payment fees are being heavily competed away. But if you look at the money retailers are spending on selling on third-party channels, on advertising, right? And you add that into the economic equation, they're going to pay a lot more there for what we charge on the merchant rate. And I think that's the interesting. The payment expense becomes a little bit of a marketing expense.
Yeah, perfect. So both of you mentioned about the wallets. İlker, what do you think about the future of wallets, digital wallets? Do you think eventually we have a super wallet?
So, as I mentioned, we see a great demand from the institutions to leverage their wallet apps. And what they are trying to do is becoming marketplaces, the wallets especially. They are trying to integrate with the third parties. And with this way, these wallets will have synergy to upsell opportunities also for the customer management as well. I think we are going to have a lot of super apps and wallets especially, but the ones who will be able to go into our daily lives, as Larry have mentioned, will be winning the race here. So because we will see a lot of wallets in the near future, but the ones who will be able to go into our daily lives will win. I think in near future it will be a consolidation as well. The super apps who will meet the customer needs will win. As Birleşik Ödeme, we are enabling at least 4 or 5 big applications which has millions of users for next year. You will see the examples of these. It's coming on January, February. So, but we will be hearing about super apps and the wallets more often in Turkey. But in the long term, I'm waiting for a consolidation, to be honest.
So please, Larry.
I was going to ask Ilker a question, if that's permitted. I was interested to know your views on Google Pay and Apple Pay in Turkey.
Turkey. Unfortunately, Larry, we don't have Apple Pay in Turkey. They are not active here. And Google Pay also is not very popular here in Turkey. So hopefully in near future, we will be seeing those. But our central bank is take some regulations which will be changing our lives very recently. So the QR payments is coming to our lives. So a simple QR, which we will be creating in our wallet, will be able to pay from all banks' POSs by next year. So It's a huge change and regulation in here. So it will make our lives easier for the wallets.
That's great.
So there's a demand to create a wallet as a service in BNPL, right, Larry?
Yeah, I think really it's about, like Ilker says, I think, the beauty about technology now is, there's a lot of connective tissue that I think you have to think about, right? That how do you connect into other ecosystems, wallet ecosystems, banking ecosystems, and then how these products manifest themselves, right? Do we originate customers, for example, in the Zip app? We can originate customers on the retailer side. We announced just a couple of weeks ago, one of the big 4 Australian banks will be issuing Zip from inside their banking wallets. So in a couple of clicks, you can basically sign up. So I think what we'll start to see is the innovative and the ones that move quickly will look to leverage a lot of these FinTech capabilities. Why? To meet the need of the customer. Because the customer is looking for, if you survey the customers and find out what they need, the sooner you can meet that need, the more engaged they're going to become versus necessarily going down a build path, right? So I think we're starting to see a lot more of these connective tissue partnerships starting to come to the boil.
Okay, you mentioned about the partnerships. Let's talk a little bit about those partnerships. As far as I can search, you are becoming a platform like Birleşik Ödeme. You have acquired a company in the US and also you have acquired Pocketbook. So I think you are becoming a personal finance management. You're trying to act on the personal finance management side as well.
Yeah, for us, you go back to the purpose, giving customers the freedom to own their financial well-being. Some customers are eligible for credit. Some customers don't want credit. And it's important, you never want to say no to a customer. If they're going to spend all the time and the hassle to come and find you, the last thing you want to do is to have the door closed. So we, about 4 years ago, we acquired Australia's largest PFM, personal financial management app, Pocketbook. It's now got just under 1 million users. It's a free app where you download the app, you connect your bank accounts, and then it allows you to track, budget, and save. So you actually start to see all of that transactional data. What's been interesting is we've been using it behind the scenes for some of the larger dollar credit decisioning. So we kind of get the bank data, we send it to Pocketbook's microservice, cleanse it, categorize it, and then we can run the machine learning algorithms over it. So it's been helping us in the back end. But the tooling it provides, it's like the brain. It looks at all the transaction data and you can really start to help customers. So that's what we are very excited about. You can make sure that they're on the right financial products, that they are engaged, and I guess what's the word I'm looking for? Evangelism that you see from these users is very, very strong. Now, our view is PFM is really only in phase 1 globally. We've seen very few, version 2.0 of PFM, but I think that's what's really exciting. I think, if you start to put some smart analytics over it, and then start picking out the pain points for the customers, whether it's bill payments, bill management. It could be lower cost products. It could be managing subscriptions. Like, there's just so much that you can do with that data. So we've actually just rebuilt it now, as we also look at where else we can take it. But it's been it's exciting. It's a great product, and it's getting a lot of attention inside Zip.
Yeah. İlker, I know that Birleşik Ödeme has a good ecosystem strategy. Could you please tell us a little bit about your partnerships?
Sure. As you know, when you position yourselves as FinTech as a service, we have to comply with all the banks, FinTechs, multinational FinTechs, Turkish FinTechs, and the enterprises here. Us not having our own products help us in order to manage this ecosystem as well. So for last few months, we are heavily working on the wallet as a service part. I can tell you that part is the one where it's going very aggressively, getting bigger. Becoming the super applications. We will see more of that. Also, the money remittance after COVID, we are seeing a huge increase on the digital money remittance side. So on the international side, like TransferWise, Remitly, and the other guys that we are onboarding, and also the local one, the one which we offer 7/24 after business hours. So having this ecosystem, onboarding big 5-6 wallets, it will enable to between these applications. So in the near future, when these guys will launch their own wallets, we will be able to talk between the wallets as well. So this will create a synergy between the wallets which is using our own systems. Also, I know Zip just did a new product with Marqeta with the virtual cards. So we are also working heavily on the virtual cards, trying to put virtual cards in the wallets which we issue. So for next year, you will see a lot of virtual card issuing on our behalf as well.
Looking forward to it.
It's going to be a busy year, Ilker.
Yeah, hopefully. We are not a unicorn yet, Larry, but hopefully.
We're still the same people we were 7 years ago. We've got better T-shirts.
Send me some.
Yeah, we will.
Larry, I think you are familiar with Turkish market, right?
Yeah, I'm learning. I'm still a student. Of the Turkish market.
So, within your limited knowledge, I can say, what do you think about the opportunities of this market?
Yeah, look, I think Turkey is a very, very large population. A young population. Obviously, installments have been there for a very long time, much like Brazil, much like Israel as well. So installments are very, very common. So I think you do have to think a bit more about how you deliver the product. Online, I think online penetration I saw was about 5 or 6%, about $10 billion US dollars online. See, buy now, pay later has to start online. That's really important. It will deliver significant payment volume offline, but you have to start online. And so having a strong online ecosystem with good growth trends are really important for kicking off buy now, pay later. But I see for retailers are all trying to solve similar problems, right, around conversion through the customer experience. And if you can deliver quick signups, I think this is the piece. You can sign up for credit cards with installments, but those signups are a little bit more friction. They're not tied to to a purchase. And I think if you can tie it to a purchase, there's a great opportunity. I think there's a lot of work though to think about the regulatory landscape. Globally, and we'll probably talk about it in a second. There's a lot that has to happen so that you can deliver a great experience on the front end, but handle all of the complexity on the back end around regulatory risk, licensing, and so forth. But I think looking at online penetration, I think COVID has accelerated a lot of these trends. It's bringing forward the e-commerce boom. It's bringing forward the digital boom. It's bringing forward the mobile contactless boom. So they're really good tailwinds. And I think customers are looking for wallets that are on their side, give them control, and have the right type of credit solution.
Yeah. So İlker, I think you have mentioned that, but is there any BNPL model practice in Turkey? I think there are some smaller ones.
It's not. We don't have exactly what Zip is doing in Turkey, but we have few good examples as well. The e-commerce is getting bigger in Turkey, as you know. It has increased around 64% last year, and what we see is the marketplaces are giving shopping loans instead of BNPL. So I can Hepsi Burada and the other guys, for example, FIBA Banka is doing some white labeling good things here with the shopping loans. I can see that. But I think digital onboarding regulation will have a big effect on that part too. So after January 1st, 2021, banks will be able to give loans digitally. So this will increase the market on there. But there is no big player in Turkey like Zip. What we see, the practices are the shopping loans through the marketplaces, through the banks, and it's the same installment model pricing. I think with the right pricing model, right business model, BNPL has a great potential in Turkey because the credit card limits are, as you know, it's around 85% full in Turkey. So people are looking for alternative payment methods, and BNPL can be a good solution for them.
Yeah, sure. But eventually everything goes to regulation. So let's talk a little bit about regulation. Larry, I would like to hear your experience on the regulation side.
Yeah, look, I think ultimately regulation needs to meet innovation, and innovation must meet regulation. I think both sides have a job to do, and both sides can't be ignorant of either side. Regulation is trying to protect consumer interests, consumer harm. Innovation is trying to meet the need of the customer, right? So, but every government is a little bit different, depending on who's calling the shots. But talking from experience over here in Australia, we offer both regulated and unregulated products, but we have a very strong investment in responsibility to make sure the right customers are coming onto the platform. If we rewind the clock back 2 years, all of a sudden our share price fell 20% in about 5 minutes. We were trying to work out what was happening, and we hear that the regulator, Australia ASIC, is announcing an investigation into buy now, pay later, right? And what that was about was more just to understand who are the players, what is the model, right? Who are the players, what is the model? And, every player is a little bit different. The fees, the repayments, the credit risk. So it was really the understanding phase. They did a lot of research. And after that research, what they found was 4 out of 5 millennials were planning on using a buy now, pay later in the next 12 months. They found no widespread consumer harm. It was interest-free. But they wanted to monitor the sector closely so that if there was any, consumer harm, they'd have the ability to regulate. While that was happening, the government, the Senate, also had a look into the sector. We had to put on a suit, a tie. I had to shave, and we went before the Senate. And again, a lot of understanding. But we go back to we own the responsibilities that come with issuing microcredit. It means identity checks, credit checks have always been a part of the model. Our loss rates, if you look at the sector, 1 in 100 Zip customers are late in any given month. One in 100. So the downstream data is actually really good, and it's because the buy now pay later customer is much more engaged. And they actually did a study over here in Australia that said customers would pay back buy now pay later over a credit card. So they're starting to build a different connection. Engagement means another transaction. It needs another repayment. So ASIC, the regulator, got some specific powers outside of the Credit Act to look in and make any changes if they saw fit, but they saw it actually as a customer benefit. So what's happening now is also there's a code that's being formed on how to ensure that the players that join are doing things responsibly, have got in place. You can check, that you can really understand affordability. You're disclosing all the right things, and you also have a program for hardship. So if a customer puts up their hand and needs help, you've got a proper program associated with that. We have seen, though, just in the last couple of weeks, some new news come through, which is for regulated credit. So we do low dollar and high dollar. And for high dollar, we have a credit license. We ask for income. We also verify the income against the bank transactional data. What we're hearing from the government is saying that no longer are the issuers forced to verify. They can take a credit risk call themselves. So if so now it hasn't passed, but what they're saying is they're trying to reboot the economy and do it responsibly and do it the right way. So you're seeing this sort of flow of the tide this way and kind of that way. I think what's important is the foundation of making sure the right customers get on the platform, the wrong customers don't get on the platform. If there's any changes, you can manage it, and these products are better than the credit card. It's being proven again and again and again. So, but I suspect governments around the world, regulators around the world, have to first understand, and after they understand, can they innovate? But these products are delivering really good results for all stakeholders, and it's been quite a journey. We also got, it really put a spotlight on the sector here, which I think is why it became a lot more well known.
Larry, for the last 1 year, we have been talking about open banking and onboarding our customers to the network. So, from the regulator's perspective, how is your customer journey in terms of onboarding?
So the specific onboarding for a customer would be, so again, it depends on, as I mentioned to you earlier, regulated or unregulated. We use at the moment if it's low dollar, you can pull credit files, look at data. There's a whole range of data sets that we use to make that decision. We can look at historical transaction data. As you move to the higher limits, we will ask for connecting your bank account. Now, at the moment, you use a username and password, and we use bank aggregation to scrape that data, which is what Pocketbook does as well. So we have that capability. But we actually did about 2 years ago the first open API integration with one of the banks here. Our view is, the sooner that comes, the better. The banks have been holding back because as soon as it becomes quite easy, you'll see a lot more mobility of customer accounts, and which is in the best interest of customers ultimately, right? So the ability to, using a mobile phone or a clear API integration to get read APIs and write APIs will ultimately deliver much better products for customers. It will become much more competitive. So I think, you look at here, UK, I think the problem there has been too many different APIs, not enough standardization. So it's been quite difficult for fintechs. But you're starting to see the move now with Visa putting money into Plaid and TrueLayer over in the UK, which is trying to standardize bank read APIs, bank-to-bank payments on the fast networks as well, which would be off scheme. and the fast payments. So I think we'll start to see some really interesting innovation, but it's probably not coming quick enough, candidly.
Yeah. İlker, the same questions for you. You know that there's been an improvement on the regulatory side on the last, let's say, 2 years. So you're very close to the customers as Birleşik Ödeme. So how do they affect your business? I mean, on the regulatory side, I mean on the onboarding of the customers.
Sure. As you have mentioned, there are two big major regulations which just passed on: the digital onboarding and open banking side. So our main goal here in Birleşik Ödeme is the seamless integration and seamless payments for the wallets and everything. But unfortunately, it's not the perfect case right now because of the regulation part. The digital onboarding will be improving this too much, because forcing the end users to sign the agreements, etc. It's making the journey a little bit difficult, sending it, getting it back, approving, etc. So the digital onboarding was something we were waiting for a long time, also the banks. Hopefully, as of next year, we will be using this, and it will be just a matter of time to onboard the users. Also, the open banking API side, as you know, we are integrated with 18 different banks in Turkey, and which we achieved to do in 2 years. But as Larry mentioned, there is no standard APIs, etc. So it was a huge work for us. Thanks to Central Bank, now it will be an open API and a standard API, so which will make our lives easier. And also this new regulation, which will let us to do with the new open banking features, like pocketbook applications, we will be able to offering personal finance tools to our end users as well within these wallets. So I think the regulation in Turkey is getting better, and it will have a better effect on the user onboarding side, also the payment side as well.
That's great. That's great. It's really encouraging where you guys are getting to over there. Are they looking to charge for the data? So is the banking community looking to charge for extracting the data, or what model is being adopted there?
Larry, please don't put new ideas into the bank's head.
Please.
Yeah. No, I agree. You're delivering value. I mean, that's the truth, right? The value that the customer gets is worth more than charging 2 cents for a read API. So that's
Right now, how we position the APIs and the banking finance model is, Larry, they are charging us per transaction. So some banks charge differently, we put some money on the accounts, etc. So we are dealing with each bank differently. So I don't think there's a regulation, and will be a regulation on that part. And I'll be happy if you don't put new ideas to the banks.
Okay, guys, we're on the last quarter of our session. If you don't have anything to add, I would like to leave the floor to our Q&A session. I'm sure there are some questions for Larry and İlker as well. Do we have some questions, Ahmet? Okay, I have the questions right now to Larry. Do you think to enter Turkish market, Larry?
Yeah, I mean, look, for us, we are, very excited about the region. I think there's a huge opportunity right across the world. We look at what we see in markets like Australia, and we just see such a huge opportunity to bring innovation into these markets. What I would say is, we're in the US. We have to make that very successful. We're launching in the UK. We have to make that very successful. We've just spun up a new markets function, which has about 50 people that's doing all the work around centralizing risk regulation, so that it's easier to enter different markets with and deliver the right experience, but leveraging a lot of the work that we have behind the scenes. And we're very excited by both developing markets, obviously but also developing markets as well. I think there's a huge role to play, and the challenge for us is the globalization. I think that's a lot of late nights like tonight, but we really enjoy it, and a lot of work going on behind the scenes to deliver the future state. But yeah, we think we can get to 100 million monthly active users, and it can't just come from America, UK, and Australia. So it's a bit of a roundabout answer, but hopefully, hopefully sets the scene.
Okay, another question is for you again, Larry. Could you elaborate on who bears the risk, the credit risk?
Yeah, sure. So on BNPL, you have to identify first-party fraud, third-party fraud, and credit risk. So the model that we've built is one that says if we authorize a transaction, then we wear all the risk, unless the merchant has been complicit or has misrepresented their product, for example. So we wear all the risk. We offer a seller protection, and we settle funds the next day, right? So it's a really great experience. And obviously, we've over the years we've written a lot of losses over the years as we've learned and trained the engine. So the losses that we have are both fraud and credit, and we have a range of data science team focused on different parts of that journey.
Okay, since you're the guest, I think most of the questions directed to you. Again, another question for you.
Ilker's getting off lightly.
Everyone knows him, so most of the questions are directed to you. So, what agency regulates the system? Banking regulators, or finance regulator, or an independent body?
Yeah. So, if we look at the Australian case study, you've got the APRA, which is the Australian Prudential Regulatory Authority, which regulates banks. So if you want to become a deposit-taking institution, then you're regulated by APRA. If you want to offer consumer credit that's regulated, then you are regulated by the financial services player, which is in this case is Australian Securities Investment Commission, ASIC. Okay. When you start to move into unregulated, you see different oversight depending on different countries. So what you are starting to see is, how does the regulator regulate something that it isn't entitled to regulate because of all the exemptions, right? You've seen new powers being asked of them, things like product intervention powers, which allows them to, which I think is quite innovative because it sits outside credit legislation, but is based on the right thinking and approach.
Okay. Another question again for you, Larry. Is it possible to buy fuel with BNPL?
To buy fuel. So I think there's different types of BNPL products out there. So I think that's important. So some are pay in full. So if you buy a T-shirt for $160, you pay $40 today, $40 in 2 weeks, in 2 weeks, and 2 weeks. In the United Kingdom, where a lot of people are paid monthly, you see a pay in 3 over 3 months, and obviously in Turkey, if you have cell phones, I think it's not more than 9 months, and etc. So there's the installment solution, but you also see what is BNPL, which is pay by account, which is more like a tab. So it's almost buy all the things in the month, add it to the account, right? So that would be fuel, grocery, and then just pay it back at the end of the next month, right? And so in Australia, we have a pay by account, and in the US, it's a pay in full. The truth is, if you're paying fuel, I guess the question is really around what customers are on the platform. So if the customer cannot afford the $50 grocery, then they probably shouldn't get onto the platform, right? It should be a pay now solution. So I think you're also starting to see the blending of pay now, which comes straight out of the debit account, or a pay later. And I think Turkey is a perfect example. You guys, I think you're not allowed to pay installments for groceries, but of course electronics is quite different. So that's quite a responsible model. It's got protection in. So it really depends on the model. But ultimately, you got to make sure the right customers are coming onto the platform. And if they are coming on with lower limits, you're training the right behavior on repayments and how to manage credit.
Well, let me add something on top of this. So on fuel, there is again a restriction, Larry, for the installments. But with our partner bank, FIBA Banca, and with Petrol Office, we tried this with shopping loans with small scale, and it was successful, to be honest. So it's good to see people are using these loans for their daily lives, as I have mentioned to you on the wallet part.
And look, the truth is, if you look in any market, whether it's America, UK, credit card is a form of buy now, pay later. So it's really the difference is there's very high interest at the back end, but if you pay it back on time, so really it's all in the same space. So make sure the product's right. Every day is where you're going to get engagement. You talk about we have lots of customers, but what we focus on internally is the monthly transacting user, not the total users. How many users are transacting in the month? Many times a month. Because if you payments is the access point to the relationship, and if you have customers using you more frequently, you're much more important to them. You can then start to do a whole range of activities. So you've got to focus on that.
İlker, I was going to ask the same thing about the fuel to you. You mentioned that before me. İlker, a question for you. People are asking about your global expansion plans and your challenges that you faced as you're scaling up.
Sure. Actually, what we were aiming for 2020 was for the global expansion. Global expansion means CIS to us. As you know, we are partnering with big fintechs like TransferWise, Remitly, and the other guys. They want us to take the same business model to the region, like Azerbaijan, Uzbekistan, Kazakhstan, Ukraine, Russia. And before the COVID, we started to visit these countries, started to talking with the central banks, ministries. Few countries had regulations, some didn't. But for next year, we will be again rebooting this thing, and at least we are aiming to have at least 3-4 offices in this region. And while scaling up, we have increased more than 300% this year for Turkish market. We had few challenges here. The financing was a challenge, the IT solutions, integrations, etc. But I can tell you that we are getting over them pretty easily.
I'm sure you can. So there's another question for Larry about default rate modeling. It says that it is very crucial, the default rate modeling. How do you see COVID impacting the default rates?
Yes, I think, it's been really interesting. One, because Zip, we can see obviously the repayment data, but Pocketbook, we see everyone's repayment data. So we don't just see our data, we can also see the banks and other credit cards. What was interesting, when COVID hit, we did a lot of modeling to work out the future. What does the future look like? Very uncertain. So we took a number of, very quick, decisive actions. We made it much, we made it much more difficult on the onboarding. So we kind of raised the cutoff for applications to a much higher threshold, based on not just customer profile, but also what sectors customers were employed by, because those that might be more exposed to travel, for example, and other things. On the portfolio itself, we did a lot of work, and because it's all digital and easy to implement, we reduced limits for and dormant customers. We did a lot of portfolio management activity, and we sort of waited. what we started to see was also the government in Australia also provided stimulus. So they provided stimulus to certain parts of the market. So in fact, there was huge repayments that started coming through. I mean, we were doing maybe $150 million a month in repayments. The next month, we did 200 million. It jumped from 150 million to 200 million. So customers were paying back quicker, getting more control. We've also seen savings rates double across the country. It's the same data we've seen in the UK as well, and other markets. Our arrears rate, our loss rates are about 2.5%. If you look at the receivable, about 2.5%. Our arrears, which is 60 days delinquent, has actually come down to less than 1%. So we haven't seen these arrears rates for quite a few years. So I think what's happening is it's the type of customer, really. It's the type of customer, how they're behaving, and their engagement with the platform. It's very different to consumer finance loans that were 5, 10, 15 and 20, which obviously are much larger and therefore have been much more impacted by COVID.
Okay. Guys, we are running out of time, but the last question for İlker. People are very curious about your products or services for the upcoming year. How is your comment?
As you know, we have 7 different verticals, to be honest, and every year we are launching at least 1 or 2 very innovative products. Yeah. And the ones that I vote for are the digital wallets and the Pay Safe product which we did, which is digitalizing the cash and sending the physical cash into the bank accounts in the same time. So we are seeing a huge demand for our Pay Safe product. We just launched in 2 months and we got order more than thousands of these. Wow, so perfect. I think that will be affecting the retail market. And wallets, you will see about our wallets with these big super apps soon. So these are the 2 products, but of course in 7 different verticals, you will see a lot of good partnership and new products that we will be launching.
We are waiting for them then. Okay, guys, it was very nice to have you on the stage with me today. It's almost 11 or 12 midnight in Sydney, I think, Larry. Thanks for your time. And İlker, also thanks for your thoughts. Hope we can meet in not virtual space, in the logical space, Larry.
For sure.
I would like to thank you again and hope to meet you again in person.
Great. Well, thanks so much for having me, and great talking with you as well, İlker. So, thank you very much, Mr. Selim. We'll speak soon.
Okay. See you soon, guys. Bye-bye.
Bye. Thank you.
Bye-bye. Thank you.